Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with euro against the dollar. A second bullish white soldier yesterday and a follow-on of a sort, I suppose, to the ground broken by the high tongue made on Tuesday. The market punched up and through once again the congestion between 103.38 to 103.69, closing over it for the first time since early July. Prices also punched up and through the declining long moving average, currently 104.08, but the market closed just underneath it. Now further up we have the February and March lows at 104.92 and the upper time, currently at 104.99 of the broker, but seemingly still influential January to May 2021 bearish Andrews pitchfork. This all highlighted the two recent core patterns here. We have a September to date ascending triangle and a September to date ascending wedge pattern. The wedge pattern is currently 98.58 to 101.79. I've highlighted the ascending wedge pattern in blue to give a clearer idea of what I'm talking about. Both these patterns have had false breaks in both directions, which complicated things and compromised both patterns. However, both patterns repaired themselves and last Friday saw a clear break above the upper trend line of the ascending wedge pattern. So with all this action, let's now look topside and see what the remaining opportunities are for these patterns. We've already seen the market reach and exceed the primary and secondary targets for the ascending triangle pattern, so these have been retired. We now have still live the possible targets for the ascending wedge pattern of a primary target X2 in the 105.35 area and a secondary harder to reach target X3 in the 107.65 area. So far today, a slightly higher open with a dip below back into the 103.38 to 103.69 congestion, followed by a move back up to challenge the long moving average again, though not successfully. And prices have fallen back down to the bottom of the congestion. Interestingly, it looks like a bearish engulfing pattern right now of all things. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, which was a follow-on to the previous session's immediate countering bullish engulfing pattern. Thus prices closed for a second consecutive time over the upper trend line, currently at 117.97, of the recent ascending wedge pattern. Much as in Eurodollar, there are two core patterns here. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to date ascending triangle, currently at 114.19 to 115.05, and also a September to date ascending wedge pattern, currently 114.19 to 117.97. Both patterns have been previously compromised and both have repaired themselves. Late last week, there was a break higher over the flat trend line of the ascending triangle, giving possible targets for this pattern on the upside of a primary target X in the 120.20 area and a secondary harder to reach target X1 in the 122.5 area. On Tuesday, the market managed to reach the primary target X before pulling back down. We'll now see if there's sufficient bullish incentive to reach target X1. Meanwhile, we have the second consecutive close over the upper trend line of the ascending wedge pattern, so it seems appropriate to lay out some possible upside targets for this pattern. Thus, the primary target X2 would be in the 124.20 area, with a secondary and harder to reach target X3 in the 128 even area. So far today, a slightly higher open with a subsequent move higher. However, that has stopped and reverted back down, testing the lesser Fibonacci line at 118.59 and almost moving back down to the upper trend line of the ascending wedge pattern. We'll see. Interesting to see what happens now. Euro sterling. An indecisive doji cross yesterday, but with a long tongue on it that had a lower high than the previous session. This last bit can be seen as further bearish intent, but the indecision I suspect is due to two reasons. The support of the short medium moving average, currently 87.26, and the April 2021 high at 87.19, plus the nearby rising lower time, currently 86.95, of the breach but still, or since repaired, April to August bullish Andrews pitchfork. As latter support is perhaps the more serious. Meanwhile, overhead we have the 50% Fibonacci line of the March 2020 to March 2022 move at 88.51. So far today, slightly higher open, but then a move down through the April 21 high. The short medium moving average as well, and testing the lower time, though that has not been successful at breaching it. Just in case, beneath that we have the April 2020 low at 86.69. and then the slowly rising medium moving average, currently at 86.10. Interestingly, the whole action for the last 3 weeks is beginning to resemble a possible roof pattern, sometimes called a half diamond pattern. US dollar against the Indian rupee. A bullish opening white Mariposa yesterday, and also a third bullish white soldier. The market punched up and closed over the recent resistances of the 50% Fibonacci line at 81.13, and perhaps more importantly, the rising short medium moving average, currently 81.38, but halted once again ahead of the lesser Fibonacci line at 81.63. I now need to discuss the larger scenario, which I'd previously mentioned in my commentaries here. So I'd highlighted the September to early November ascending expanding wedge pattern. Late 2 weeks ago, prices pushed up through the lower trend line, or pushed down, through the lower trend line, currently at 83.54, and the move lower since then until the end of last week had confirmed the pattern. This gave a primary target in the 80.70 zone and a secondary harder to reach target X1 in the 80.28 zone. Last Thursday, the market reached the primary target, but we've since seen the market being shy of testing the rising medium moving average below, currently at 80.55, such that I'm now wondering if perhaps, just perhaps, reaching the primary target may have been enough. This requires a little more contemplation and some further data over the next few sessions. So far today, a slightly lower open, with the market dipping down to the rising short medium moving average to gain some ammunition before making a move up over the lesser Fibonacci line at 81.63, though it seems the market is not entirely comfortable in moving over this lesser Fibonacci line. Next overhead, just in case, we have some recent congestion in the 81.94 area and a small congestion band, 82.15 to 82.26. US dollar against the Brazilian real. A second bullish white soldier yesterday and very nearly a possible, quite large, hanging man pattern. Thus, the market seems to have snapped out of its indecisive reverie and closed for the first time over the upper time, currently at 536.57, of the breached July to late August bearish shift pitchfork. This may possibly be the end of its career as a capping pattern. Prices also moved and closed over the lesser Fibonacci line at 538.13. Looking above, we have a lesser Fibonacci line at 543.81, which I suspect may be more powerful. That, looking at it, suggests. And then the July high congestion around 550 even. Meanwhile, below we still have the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37, which I continue to say does not look that good a support. Though the other slightly lower 50% Fibonacci line at 522.76 of the March 2021 to April 2022 move does look a better support. I suspect that may be because the latter is due to the conglomeration of moving averages nearby, specifically the short moving average currently at 525 even, the short medium moving average is currently at 523.96, and the medium moving average currently 524.46. Additionally, I'm still mindful of how the market last week almost set up for a possible monthly key reversal. The move up yesterday added to that idea, and I will still keep this possible idea in mind. US dollar against the Mexican peso. An unusual situation yesterday. On the face of it, we have a second indecisive spinning top. But a second indecisive spinning top that was also a bearish engulfing pattern. Now, this wasn't that hard to do, as I've already said. We had a prior indecisive spinning top. Overall, recent moves lower all relate to the previously highlighted crossover combination of the broken upper time, currently at 1957.96, of the March to July bearish Andrews pitchfork, and the middle time currently at 1975.49 of the still intact bearish shift pitchfork for the same move. The cap on yesterday's activity was the recently broken support, now resistance, of the May low of 1940.70. Beyond this, we have the still influential 2021 low at 1953.63. What's below? Well, under this week's low of 1923.21, we have the March 2020 low at 1915.03, and then combination of the pierced lows from July 2019 at 85.40 and the lower time of the March to May bearish shift pitchfork. bearish Andrews pitchfork. My apologies, bearish bearish shift pitchfork. Got it right the first time round. Currently at 1885.52. Now, so far today, a slightly higher open, and what is looking like a reactionary move back up over the May low. Next will be the 2021 low, and then the broken upper time, currently at 1957.96 of the March to May bearish Andrews pitchfork. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.